South Korea's foreign exchange market may extend its operating hours and open up trading to offshore firms. That's according to local financial authorities today. It could be the first big change in more than 70 years. Our finance correspondent Kim Yeon-seung with all the details.
South Korea's foreign exchange market is likely going to see some big changes as early as next year. The finance ministry on Tuesday announced a proposal to double the foreign exchange trading hours, so the market will be open until 2 a.m. This in a bill to be submitted to the National Assembly in the third quarter of the year, and if passed, likely to be implemented in the second half of next year. Eventually, it said closing time in the foreign exchange market could be done away with altogether. The government also intends to invite offshore firms to trade, including global banks and brokerage houses. Currently, only local financial institutions with the government's approval stamp are allowed to trade. The South Korean foreign exchange market has been long due for a shakeup, seen as having been stagnant for the past 70 years. There's been a reluctance to reform due to the trauma of several financial crises over the decades. But the government is now looking to change practices it sees as outdated and restrictive to capital flows and market growth. An official at the finance ministry said Tuesday that foreign exchange is a road that transports capital around the world, and that South Korea's road is narrow, worn out, and no longer fit to accommodate the growing market demand. The government hopes that this change will also raise the status of the Korean won in the global market while decreasing the country's dependence on foreign currencies. This change, however, does come with some concerns about increased exchange rate volatility and trading focused on specific hours. However, the government assured those concerned that they will take these worries into account and make sure to minimize the risks. Kim Yeon-seung, Arirang News.